All right, I need all of my audience, anyone that's ever watched my videos, to listen to what I have to say in this video, okay? This is not hype, it's not speculation, this is not FUD. I'm just gonna lay out, okay, some scenarios for the cryptocurrency market, for Bitcoin, everything that's happening right now, macro conditions. I dove extremely deep. I've been up since 5 o'clock in the morning. I've dissected literally the entire history of Bitcoin's price, and I'm making some big foundational decisions in this video. This is a huge warning to everybody involved with cryptocurrency and might be one of the most important videos I have ever created. Guys, I'm not going to put a bumper in this video. I'm not going to edit it at all. I'm just going to dive directly into it right now. So again, I want to look at Bitcoin from a bullish scenario, but I also do not want to ignore the bear case for cryptocurrency. Too many times people are losing money because of this diamond hands society, this diamond hands concept. It looks bullish for everything. But let me tell you, there is a war on your mind. There's a psychological war that's currently happening. I'm going to prove it to you in this video, and it's kind of scary. If we look at the S&P 500, this is kind of aligning with a bull scenario. Why? Because Bitcoin will move with risk on assets. And as you can see, the S&P 500 index recently just bounced. This is the top 500 biggest tech companies, 5.3%. We also see the Dow Jones Industrial Average doing a similar bounce. A lot of people claim that you won't see Bitcoin, bounce until those are in kind of like a bullish uptrend. So we see it looking like maybe V-shaped recovery on a smaller time frames. We're looking at a daily time frame. This is very small, just to be clear. Usually you should be looking at the weekly or monthly for these type of indexes. But you can see that Bitcoin's reacting pretty positive. You see in recent history, it's moving up to this big resistance line that we see here. So just to be clear, I want to see it break out right here. I want to see it break out to the bullish side. Okay, similar to what we saw over here, in May with this big manipulation downside. I want to see it break out right here, and this is what I've been talking about over and over again. Now, I want to tell you guys the truth. I was wrong. I told you that it was going to play out like this fractal here, and it looks very different now. It does. It looks very different. It's taking longer. So, like from this manipulation candle here to here, it's 63 days. From where we're currently at, we have about already 58. So maybe it does play out exactly on the 63-day mark, but I think it's more likely that we'll probably reject off of here, bounce back down to 30K. Well, and this is what I've been saying over and over again with all my videos. This is the reason why I sold 70% of all of my crypto. But yeah, and I want to back this up with a lot of evidence. Okay, so again, I've said before that I want to see the beginning of February. We're probably going to break out to the upside. But to be honest, my mood is changing very not slightly, significant. Okay, and Fundamental Secrets, which is my coaching program, you guys can get access from the pinned comment below. We're doing a $1 5-day trial. The last time we did this, we saved a lot of money for a lot of people because the market dumped significantly. You could definitely check that out in the pinned comment below. Take advantage of it. $1 5-day trial. But in there, I'm telling people that I'm bearish in Fundamental Secrets. This is what the video is about. All right. So pay attention to what's going on. All right. So let me pull up this chart here. The BLX is basically a history of all Bitcoin's price. And there's a couple of things I want to point out. Obviously, it's a little bit complicated here. I'm going to make it more simple for you guys. If you don't know anything about crypto, trust me, this will be easily digestible. It's going to be very digestible. Okay. If you know a lot about crypto, then I need you to watch this and piggyback with your own research to see if I'm right or wrong. And tell me that this doesn't change your mind. If you're a perma-bull right now, if you're bullish, please tell me if this changes your mind or not, because it changed my mind. All right. So basically, we know that Bitcoin moves off these big halving events. So you see these vertical lines here are marking the halving events since Bitcoin started. And this is basically the scarcity element of Bitcoin that everybody talks about. Less Bitcoins coming out, less inflation of Bitcoin equals more scarcity, less Bitcoin on the market, which catalyzes the price to increase. And this has been the biggest catalyst for Bitcoin since it started. Plan B came out with the stock to flow model, and this changed everything for pretty much everybody. So I want to go over a couple of time frames to show you how it catalyzed the market. So first things first, I don't like using this data because it's incomplete. And it's so early. This is from 2010. So If we look at the first cycle, though, you can see that it started mooning, or the bottom happened basically before the halving event, about 357 days. And then the halving happened, and then you can see it went parabolic once, and then went parabolic twice. I know there's a lot of words there. I'm going to explain, but look at the time frame. The time frame was about 371 days to the exact top, and then the bear market was basically 399 days, and then we see the bottom, and the market starts to increase in anticipation for this next halving cycle, which is about 546 days. So again, we have 371 bull market, we have 399 bear market, or bear market here. And then we have this kind of sideways uptrend in anticipation for the next bull run, which is about 546 days. And then we see this parabolic growth curve, as you can see here. And the parabolic growth curve is very important. Pay attention to what I'm talking about, because you see it here, you see it here, you see it here, okay? And this indicates that we're growing exponentially. If you understand the math behind a parabolic growth curve, it's exponentially increasing. Linear would be something like this. So like that's like the S&P 500. So it's like kind of, it's not true innovation. So you can see this like kind of linear growth. You could even see that it's like kind of toppling over too a little bit. It's like falling slowly. This is not true innovation. This is artificial. But you could see true innovation from the biggest companies on earth, like Tesla, Apple. They all have parabolic growth, not linear. They all have this kind of upwards U shape. And this at this point here is when we start getting exponential. Okay, so I want you to pay attention to that, because if I'm a whale, I don't want to see that, right? Especially if I want cheaper Bitcoin and I want to end the Bitcoin market. If I want to stop the Bitcoin market, I don't want to see that parabolic growth. I want to like halt it in its tracks, which is going to lead me to a lot of the conclusions that I drew in this video. So I was very skeptical, right? So if we come over here again, we saw these dates, right? 371, 399, and 546. Now, if we look at the second cycle, we see something very similar, okay? So we see the first one, which is 518 in the bull run, which over here was a little bit less, 371. And then we see the bear market, 378. We come over here, 399, very, very similar. And then if we come over here to kind of where it bottomed out in anticipation for the next bull run, we see 511. And then we see 546. So very, very similar. The only difference is that this one took a little bit longer than this one over here. Now, there's always a theory that people talk about. I've said it in the past before, and I do slightly believe it, but I'm going to make the case that it's not probably true. So it's called the law of expanding cycles. So as more money moves into the market, it takes longer for the bull runs and it's longer for the bear runs. So the cycle expands because it's harder to move the market. Now, if we look at the Bitcoin halving kind of dates, this is consistent. So the time span in between the halving has been very consistent because of the block. How the blocks work, it's all about the difficulty versus the reward time and them solving the block. So it's been about 10 minutes per block. And as you can see, it moves off the block. So it's about 1,400 days, about close to 1,400, a little bit less in the first cycle. So this is very consistent. And if this changed, then I would probably submit a little bit more to the law, the expanding cycles. And the reason why this theory is so important is because if we're looking at what we're currently going through right now, the top was 518 days. This one was 371. And we are about 525 from the top right here, 525 right here to the top. So, in time frames, if there was expanding cycle and it takes longer for Bitcoin to hit the top, then we're not at the top yet, right? But I'm going to make the case that this cycle is very similar to the last ones in time frames, and this might be the top of Bitcoin. Now, again, don't get scared. Okay, I'm just giving you guys research. Okay, just this is that simple. But let me make the first case. Okay, why did the market end in all other cycles? That is the question you have to ask yourself. What ended the market? Okay, it's not just time, right? You can't just base it off how much time the price has been increasing. You have to look at specifics, right? So if we come over here, you can see that there's a lot of events that kind of caused this massive sell-off originally in Bitcoin. And you can see this one day, Bitcoin dropped 77%. And it was because of this market cool down halt on Mt. Gox. 70% of all trading volume was happening on Mt. Gox. The price was way too volatile, so they halted trading. And then the funds were returned and traded continued here, which fueled the next leg of this parabolic growth curve. And And then the market basically ended with China banning Bitcoin transactions and a Mt. Gox hack on February. And you can look up the actual time frames for yourself. This is not the time frame. If you come over here, yeah, I mean, it's basically right here, Mt. Gox. You can look at the dates. The actual hack happened in February. And then we had the China ban news. This was the recent China ban news, but you could go look at it for yourself. My goal here is not to break down every specific. If you don't believe me, you don't believe me, but it's very true. China banned Bitcoin transactions literally at the exact top. You can Google search it for yourself. It's not that hard to look up. Let me see if I have it here. No, it's not. I don't have it here. Yeah, I don't have it here, but you could look it up. I wrote this down for a reason. And then we have the Mt. Gox hack. Okay. It's very simple. And I have evidence for the other ones, as you can see. I just forgot to leave that tab open, but the market retracted 85%. That's a significant amount, right? And as you guys know, percentage down is brutal. It's more brutal than percentage up. So if you go down 50%, it will require you to go up 100% to make those gains back. So the people that diamond hands don't really understand this. They think that just because it's 50% down and it goes 50% again, that they break even. That is not the case. Percentage downs are more brutal than percentage ups. You have to pay attention to that. Seriously, guys. So if the market ended, you would have lost 85% of all of the value in your current portfolio. And if you had altcoins, it would have been significant. It would have been less. You would have lost more. You would have less USD. So this ended with China banned Bitcoin transactions and Mt. Gox hack, which pay attention to because it's a similar trend. Mt. Gox is a centralized exchange. They handled 70% of all transactions. This is manipulation on a centralized exchange. Okay. And this is a country banning, which is China, and they always ban. Okay. So pay attention to that. Now, if we look at the next cycle, you could see that we have, again, I showed the time frames, very similar time frames. And at the exact top, you can look it up for yourself. I think I actually have it here. Right here, Bitcoin price jumps to 2,000 after CBOE futures launch. So they launched a futures exchange on December 11th, 2017. If we go to the BLX, you literally see December 11th, 2017, they launched a futures, okay, which is a centralized entity. This is a centralized entity that they control, and it ended the market. The whole market ended and went down 83% after they launched this futures for Bitcoin. Right? It was like a sell the news event. Clearly, they were trying to cash out for sure because this is supposed to be bullish. Think about what retail's thinking. Oh, super bullish, man. We have a futures, blah, blah, blah. Everything should be positive, green, green, green. Let's buy more Bitcoin. Then whales get exit liquidity and whales dump on people. And the market loses, again, 83% of all of the value. And I'm not trying to scare you. This is just the truth. Now, this cycle is obviously different. They needed a different playbook. If I'm a big time whale with billions of dollars and I have other whale friends and our goal is to get cheaper Bitcoin, how am I going to stop the market? And we can see in the past, again, they have centralized entity control. They have centralized exchange control. And they also use countries to ban. And this is kind of like sentiment because China unbanned it. So it's definitely like they're trying to just get into people's heads, right? And this was obviously centralized exchange control, right? So you can't call it an exchange, but it's centralized. They have control of the futures market, right? And this is why this Bitcoin ETF that we have at the literal exact top of this cycle, that's why they didn't allow spot Bitcoin to ETF, because spot exchanges are different. People actually take the Bitcoin off, the market when they're using a spot exchange. With a futures market, it's not the same. It's manipulated. But I want to bring your attention to this event right here, because this Bitcoin halving was a little bit different. It was almost like the cat was out of the bag, right? So if we look at Bitcoin halving on the search term, you can see on this exact date right here, May 10th to May 16th, we have a large spike in search volume for Bitcoin halving search term. Now, I'm speculating that this was institutional researching this. And the reason I say that is because if you compare it to a retail search term, which is like crypto, right? This is a retail search term. If people are searching crypto, it's usually like the normal person. It's nothing even close. It's not even close. There's so much more retail volume on the search term crypto than Bitcoin halving. So it's to my assumption that the Bitcoin halving search term, okay, which is not letting me delete it. There you go. The Bitcoin halving search term, okay, this was probably by some institutional demand. And the reason I say that is because Bitcoin halving, is highlighted by the stock to flow model. Institutions never bought Bitcoin in the past because they needed a risk model to assess, how Bitcoin moves. And when the stock to flow model came out, this is where they got involved. And what I want to say in this video is I think institutions are the ones being manipulated, not retail, because retail is not yet in the market, or maybe they are, but they're in the market in a different way. Okay. I promise all of this will make sense. But if we come back to the BLX, very simply put, we have Elon Musk manipulating the sentiment and not accepting Bitcoin for payment, or canceling the Bitcoin, whatever, for Tesla. He canceled it, saying it's not environmentally friendly. It dumps the market. China bans again, similar to what we see over here. They're trying to change the sentiment. China bans Bitcoin transactions. China banned again, brings the market down even more. Then we have whales accumulating more cryptocurrency to drive the price right back up. But notice, none of these were parabolic growth curves. These are all going down. But it's funny because we were about to reach parabolic growth here, and then we have Elon Musk. Think about it. I want you to think about that. Destroying the market with his social currency. I think the whales and the biggest entities in cryptocurrency realize that the community is becoming a huge effect. Before it was mostly Bitcoin, halving event and a decrease of issuance and the scarcity element. But now it's the communities that are driving in demand. And I've said this over and over again. So they have to attack it from a different vector. So they attack it with an Elon Musk tweet. Maybe they paid him, maybe they didn't. Whatever the case is, it happened. And the China ban news dropped the price significantly, which is crazy because we've never seen a 48% price reduction. If we come back over here to 2017, 2018, there was no 48%. 37. So it scared everybody. It invalidated everybody's thesis, right? Because in this cycle, what was guaranteed, right? There was two things that were guaranteed. Number one, a stock to flow model was a guaranteed risk assessment model that everybody used and everybody based all of their decisions on. And number two, everybody thought guaranteed 100K Bitcoin. That's what everybody thought, guaranteed 100K Bitcoin. So if I'm a big whale manipulator and I have billions of dollars and I want to make more money and I want to, take the money from the poor, what do? Well, I invalidate both of those theses, okay? Which is basically what everybody was thinking, including myself. And this is why I'm waking up right now to try to explain this and spread awareness of what's going on, okay? So what do? Right before it gets to 100K, we see the parabolic growth. It would have definitely hit 100K. It would have got up to 100K. But no, let's get Elon Musk involved. Let's change the sentiment. Let's destroy the market. And that's what they did. They stunted the growth here. The market came back down, and then a lot of entities bought right back in, tried to bring it right back up, and they rinse and repeat. And they sold again with the Bitcoin ETF launch, which is again mirroring the same playbook. Look, futures launch, end of market. Look, China bans Bitcoin, Mt. Gox centralized exchange control. Centralized 70% of all cryptocurrencies on Mt. Gox. This is another controlling vector. It just changed to now a futures launch and a Bitcoin ETF futures, not spot. If this was spot, it would have probably increased and continued to go higher if this was spot. So same playbook, different dynamic. Personally, I think they ended the market. I think we're probably in a bear market. Now, I'll reevaluate in the future if I'm wrong, and I'll give you guys, again, like I said in the beginning of the video, ultimatums. If I'm wrong, this is where I'm going to go. If I'm right, this is where I'm going to go, okay? So you'll understand from every situation, you understand exact buy and sell points beforehand. So you don't have to look at me and point fingers in the comment section. The people that do that and then unsubscribe because I tell the truth, they're not going to make it. I'm going to be honest. They run from, fear. They don't face the fear. They don't, look at all of the evidence provided. And they make emotional comments on YouTube that nobody really reads. It's weird, but I want to tell you guys the truth. And I told you that I don't want to be the biggest YouTube channel. I want to be the most accurate, okay? That is my obligation to you, to tell you the truth. This is one of my biggest principles, freedom and truth. And this is me telling you the truth. Even if it hurts me, even if I know you guys are going to unsubscribe and call me a hater or whatever, it doesn't matter. So let's evaluate if the market does go down. Now, again, I showed you, okay, a situation where we have 378-day bear market, okay? We look at the other one, 399 days. So maybe we could say 350. Okay, let's just say 350. If we have 350 days down, this will bring us to about September, October. September, October, the market flips in anticipation for the next halving, which will happen in 2024 or February, March 2024. This next halving event will happen. Okay. Also, if you look at the anticipation date, 511 days. Okay. You see right here. Well, this is the same thing that happened all other halving cycles, right? Again, 511 days before the halving event, price increase. 546 days before, price increase. So even if we are in a full-on bear run for the next 350 days, or not 350, but we've already potentially, if I am right, we've already been in a bear run for 84 days. So really, it's not even 300. It's not even a year. It's like probably 250 days. 250 days more, right? If we are in a bear run, from last cycle, we see Bitcoin dropping by 83% and Bitcoin dropping by 85%. I think in this cycle, they took advantage so much here and they stunted the growth. I think we'll definitely have I don't think it's going to drop 80%. I don't. If it does, though, we're coming down to about 12K, which I don't think is likely, to be honest. We're coming down to about 13K. What I think is more realistic is probably going to come back down to the all-time high of Bitcoin's price, which will be a 70% reduction in Bitcoin's price and probably more significant in altcoins. So please consolidate your altcoins. If you don't sell, at least consolidate all of your altcoins into some like a Bitcoin, Ethereum. I think the only thing I'll hold to the bear run is Ethereum at this point. But yeah, that could be a potential scenario. But again, my reasoning for this is very simple. The playbook has been the same. Bitcoin ETF at the exact literal top. Look at where's the Bitcoin ETF? Let's look at it right now. This was the old one. This is the one I told you guys from back in the day in 2013 that we missed here. If we can find a date right here. So they're talking about 16K. This is on December 7th. So this was actually in 2017. But yeah, so basically this ended the market before. You could look at December 31st, 2013, China bans Bitcoin China bans financial companies from transacting in Bitcoin or whatever the case is. If you look at the BLX, this is literally on this exact date here at the exact top, China banning, Mt. Gox hack, right? Look at the data, guys. China bans financial payment. Let's come back over to the BLX. Look at the date, right? Scroll down a little bit, May 18th. May 18th, let's look at the price of Bitcoin, literally right here. May 18th, let's look at Tesla no longer accept Bitcoin over climate concerns on May 13th. Let's look at May 13th right here. Like, I don't know how much more accurate you want me to like break this down for you guys. Let's look at Bitcoin futures ETF, the first Bitcoin futures ETF. We look at it right here, October 19th, 2021. Literally on that exact date, we see the market topping out right here, October 19th. I don't know like how much more accurate you guys want me to do it. But yeah, it looks like it's pretty much lining up. And, again, the only difference this cycle is that people understand what the halving is, and it looks like the institutions are getting taken advantage of. Also, a lot of people are saying, oh, well, Alex, what about the blow off top? What about the altcoin cycle that happened right here? We haven't seen that yet, so the market can't be over. Well, let's go to nonfungible.com, and you could see that a lot of the volume sales is happening in NFTs. NFTs have been doing really well. If we look at the monthly, you can see it's on an uptrend. So last time, the last blow off top was captured in Ethereum and Bitcoin because of ICOs happening on Ethereum, initial coin offerings. But this time, the volume looks like it's being captured in NFTs instead of altcoins. So you got your blow off top, people. I don't know. Well, what else, I could look at, but in general, the cat's out of the bag with the Bitcoin halving. They want to invalidate the Bitcoin halving because they can make more money if they do. They definitely don't want Bitcoin to go to 100K because that would confirm everybody's thesis. They want to invalidate everybody's thesis on 100K BTC because they have every financial incentive to do that. All dates are pretty much lining up for the bear run. I'm bearish. I'm going to make money in fundamental secrets off of shorting the market. But let me give you a short-term time frame perspective. So originally, I thought we were probably going to bounce off here, come back down to 30K, then break out. This will kind of align with the dates I kept saying, which is like the end of January, beginning of February. So beginning of February, we bounced the upside bull run, right? I think it's really certain, like not really, but like in my mind, I'm like 80% certain that we're going to reject off of 40K BTC, come back down to 30K, and I'll reevaluate. At that point, I'll reevaluate. If it comes back down to 30K, I'm going to think about it again. You know, I'm not completely bearish, but what I do see is a potential to short the market. So I'm still making money. It doesn't really matter. I'm a trader. So negative 21%. Okay, I'm going to short some altcoins. Okay, probably. This is not a definitive answer. I have not made that decision completely yet. Okay, this is the unfortunate thing of YouTube videos, is that you guys are going to be able to see the information after I do it. Okay, but it's in my mind. I'm at the point where I've already sold 75% of my crypto, probably going to sell about 85%. We have this nice little pump. So it's actually a better time to get out now than it was when I made my video. You guys were all butthurt about me selling 70% of my crypto. I literally made a video. I sold 70% of my crypto. Everybody got mad. I lost like 400 subs. But now we are literally in a better situation. I sold over here. We are literally in a better situation right now to sell crypto than what I did when I made my video. So you guys will literally be I'm telling you ahead of time. Okay. So what I'm thinking is I'm getting some money off the table. Matt, one of our coaches, has a bot that does these little small trades that he's been able to get like 2% per trade. That's ridiculous. And he's been churning over ridiculous profit. I think with like an $800 account, he made like $200 in a week or something like that. Don't quote me on that. Ask Matt himself because he has the data. But I'm going to put like, you know, I sold a significant amount. I'm going to put all that stablecoin into these bots, churn profit while the market dumps, and then short with a small amount and make more money than if the bull run continued. I'm literally going to make more money than if the bull run continued. It doesn't matter, especially if you trade with no emotion. You don't get emotional about everybody else. You block out the distractions, right? Of course, they have an obligation to tell you the bull run's here. Of course, every influencer is going to say positive things because it gives them more subscribers. It makes them more money. Okay. Of course, Michael Saylor is going to buy 25 million right here because his overlords are paying him much more, right? $25 million worth of Bitcoin is absolutely nothing, Michael Saylor. I don't care if you buy right now. And if anything, it's funny that you're buying specifically at this very pivotal moment. If anything, that shows me that you're looking at the market and you're trying to do something. It shows me that literally at this exact make or break moment, are we going to break to the upside or not? From what we see here, this exact make or break moment, you're buying 25 million. That's ridiculous. That's ridiculous. I want you to think about, you know, maybe 10 influencers with millions of followers. And if you pay all 10 influencers $5 to say something positive, but you make $1,000 at the back end of you shorting the market and it coming out negative, then of course you can pay the influencers, right? It's the same thing with everybody. They're incentivized to say positive things. Everyone. And this is why on-chain metrics look so good as well, because, you know, on-chain metrics is a long-term thing. It doesn't play out in a specific, like, acute timeline for on-chain metrics. That's why all of them look really bullish. So in general, after all of my analysis, I think we're probably in a bear run in the long term, but it's okay because I have ways I make money in a bear run, and I'm going to update you guys how I did it last time, how I'm going to do it this time, how you short the market, how you make money off of that. It just, you know, it just requires some effort, which I know a lot of people don't want to hear. You guys want to get rich quick scheme. You guys want to be able to make money tomorrow, right? I'm telling you that due diligence, time, patience, education is what makes you money. And if anybody else is telling you otherwise, they're lying to your face. And that's a fact. And they have an incentive to do that. But yeah, that's pretty much it for this video. I'm bearish. You know, I'm really confident it's coming to 30K. I could be wrong. Oh, I did say I wanted to tell you guys another scenario. So again, let's say I'm wrong and we break out here. That's fine. I'll jump back in. You see this trend line here? It played as resistance. It played as support. It plays as support. We broke through, right? So this is a significant line. If we break to the upside, Bitcoin gets above 40K. It's fine. I lost 15%. Who cares? You know, again, like I keep trying to tell you guys, losing 15% to the downside is way worse than losing 15% to the upside. You lose more. You have to make more money to the upside to make up for that 15% loss. So it's smarter to hedge for the downside. It's way smarter. The diamond hands thing is a use of manipulation tactic on your mind so that they can make more money and get more exit liquidity. I hate doing this, but it's the truth. Again, if we break to the upside and I'm completely wrong, we break above 40K, that's fine. I jump back into the market right here with altcoins, and then likely if we get above 40K, bull market continue, and we'll reevaluate. And then of course, there'll be some more significant levels like right here. I would want to break above 50K to get more bullish, blah, blah, blah. But it doesn't matter because the downside is more significant than the upside. The downside is like very significant. It's like a 20% loss, potentially full-on bear run. We're in a potential full-on bear run. The risk to reward is not there, guys. It's not there anymore. And you need to take things and all of this into consideration. And the only people that don't are the ones that just don't want to face fear. But yeah, that's pretty much it for this video. If you like the quality of this content, hit like. If you don't, leave some constructive criticism. Subscribe for more video updates. And like I always say, if you don't get with it, you will get left behind. Thanks for watching this video, guys. Catch you in the next one.